Hi, my friends at CMC Markets. This is Mish, Chief Strategist of MarketGauge.com. And tomorrow in the U.S., a big day as the Fed meets, although I think the market is priced in the possibility of just 2 to 3 cuts, possibly starting in June, at a total of about 0.75%. And yet the market, even if that doesn't happen, seems to be relatively unfazed, even after the news of Bank of Japan finally ending decades-long of accommodative Fed policy there. So essentially what we've got right now is the S&P can't not sell off no matter what. Of course, part of it has to do with the tech rally continuing very strong, but we are seeing other areas starting to broaden out. So what we're going to do today is we'll look at the SPX, we'll look at some of the key commodities, and we'll look at the yen versus the dollar. So starting with this chart right here, what we can see is a close that might be the highest close. Let's take a look. The close today was 51.78.52. On this day, the close was 51.75. So we can say that in terms of the S&P index, this is the highest close ever. Now, that can't be bearish, right? So it would have to take some kind of real cataclysmic event at this point to turn this around. And we can even see down here, we talked a little bit about that mean reversion, but that didn't yield very much. And now here we are back on the Bollinger Band. So the only thing we can say in terms of the momentum is that on new highs, and especially a new closing high, we're not seeing the type of momentum that we saw the last time. We were even at levels slightly lower than this. Is that meaningful? We don't know yet. But in terms of actual levels, obviously 51.80, if we round up, is key. The high this day, but it wasn't the high close, that's why I didn't mention it, was 51.89. So let's call it 51.90, 51.80, 51.90, especially on a closing basis, would be great. But even if we manage to hold that after the Fed meeting tomorrow, that would be a positive. So where would we possibly get negative based on the fact that the momentum may be getting a bit tired? And I would say if we take the high from this bar here and the low from this bar here, essentially that would be 51.49. So 51.49 and under, we have to have a more cautious bias. 51.50 and higher, a much more positive bias, of course, over 51.80, much more positive over 51.90. Looks like 5200 and higher, here we come. And so if we break down under 51.50, we do have the last real interesting support, or I should say the last low, and look at these, we're making higher lows. So essentially, you know what, let's say even under this low, which would be at 51.04, that would be your next level of support. And if for some reason this breaks 5100, then we can say, okay, maybe it's time for us to see some kind of a correction down to that 50-day moving average at around 5,000. Well, we had certainly called this one extremely well when we mentioned a couple of weeks ago that this was a trading range, that if it broke, it would mean the yen would get stronger against the dollar, and that is exactly what happened. But we also, look at how beautifully technical this was, talked about when I talked to you last week, that it was A, also maybe a little oversold, and B, finding some support here at this 200-day moving average. And we talked about a target of around 146.50, which definitely happened. So since then, you can see how nice these moving averages are working. Ahead of the Bank of Japan announcement today, it cleared back over the 50, that is the dollar versus the yen. And now, of course, the dollar got much stronger than the yen on the announcement, but the question really is look at this level of resistance that we've had. The last time we were up at these levels was back here at 150.88, today's high being 150.96. And it settled, by the way, on the closing basis, right under that last high that we just talked about here at 150.86. So if this really can get through this 150.88 or that level-ish, then we're looking, of course, at the dollar getting even stronger. And we have to keep that in mind because that stronger dollar definitely puts some pressure today on the precious metals, which we're going to go through in a moment. And if not, if this turned out to be a one-day event where the yen got weak, then we would start to see this roll over. But I wouldn't be convinced that this is going to roll over really basically I'll take the low of this day right here, 149.90. Under 149.90, then I would look at this as some kind of a resistance with a possibility that this moves back down closer to 149.25. Above 149.90, we have to obviously feel that this level is going to be taken out. And then, of course, we have to go back a little bit here to see where our last level of resistance was. And we've already cleared this level, so we got to look at these two highs at 151.42, and this day was 151.43. So that's kind of how we're looking for the yen right now. Taking a look at the momentum, of course, you could see the dollar had the mean reversion. These mean reversions work so well. And now, on close to new highs, look at the momentum. Again, kind of like what I showed you with the XPX, not keeping up with the momentum that we were the last time we were at these highs, nowhere near it. So again, when the momentum is in divergence with the price, it doesn't necessarily mean that it will lead the price. But if the price winds up trading in line with the momentum, then you have a powerful indicator. So if for some reason we start to sell off with the waning momentum, whether it's in SPX or in the dollar yen, and the yen winds up getting a little bit stronger here, now you know that 149.90 will be your pivotal zone. Well, let's switch now to crude, and we can see here that again, we talked about the fact that I was still very, very bullish in the intermediate longer term in oil, and that's certainly turning out to be the case. And a week ago when we talked, it was sitting here right on this 200-day moving average, and of course we had this big move here on March 13th. So now what's happening? You can see we've cleared that $80 level. That to me was the big level. It was kind of like gold over 2100. However, now we have to look back a little bit here at some of the resistance areas that we saw last November when we were at these levels. The first one, we breached it intraday, but we did not close above, and that would be right here at basically 82.50. So 82.50 is pivotal. So let's say as we're coming into tomorrow above 82.50, then I would think that we would continue to see this move up. I think eventually I'm looking for anywhere between $84 and $85. But above 82.50, we certainly have a better chance of getting there sooner. Below 82.50, it's possible after having 1, 2 inside day, 3, 4 days really basically of a move higher, that we see a little bit of a correction. That certainly would not surprise me. And where would I see a correction? Well, essentially, if we break down underneath 81.50, then I would say we could possibly see another move testing that $80 level. Now here's gold futures. When you get a move like this that we saw in the gold up to close to 2200, and all it really does is basically move sideways, that is what is known as working off overbought conditions through time as opposed through price. And that's clearly what this looks like to me right now. We're hovering between the 21 and 2200 at 2160 today, but 2140 to 2160 has been a range. And so it looks to me like gold again. Obviously, interest rates are not as huge a factor here because this has been the ultimate flight to safety with a lot of physical buying across different countries. But nonetheless, if it were to become more inflationary, given the fact that oil could go either way tomorrow as well, continue up at 82.50 a barrel or under, this could at some point really shift into gear more for inflationary factors. And we'll know a lot more after we see what the long bonds do tomorrow. That would be the TLTs. But for today, we had an inside day, which means we have to look at the outside day, which is 2167. So over 2167, we're going to have a bullish bias. And where could it go? Obviously, we want to see what happens at around 2180. And then look at this doji day. That was so interesting here, where your close and your open were basically the same at 2188. And we start getting through 2180 and then 2188. This wick really doesn't mean very much to me. I think we have a really good shot of going over 2200. On the flip side, we break down under 2150. Do I think that means the move is over? No, but I would not necessarily discount the possibility that this thing then goes down to 2150. Sorry. If it breaks down under 2150, of course it's going to go down below 2150, but I would say more down to these levels here where it opened this day, which is at 2136. 2115 is still my major level that if it went down to, I wouldn't be surprised. Number one. Number two, because anything could happen. In the momentum indicators, we are no divergence here. We peaked out at the momentum at the highs, and we've come off softly, but we haven't even gotten anywhere near a mean reversion. I think it's really important to also keep your eyes on silver. I did a whole article about it over the weekend. You should check it out because I show you the calendar ranges, and I also show you the last swing high. And really basically what we discovered was this last swing high here at 2634 is the key area for this to really continue to more parabolic. But at this point, this still looks very, very strong. And you can see we have some decent support here around the 2488, 2490 level. So I would expect that to hold. And if it breaks, maybe we see a bigger correction. And maybe it's because the market gets spooked about higher rates. But if we hold above that 2488, then I think if we can get back over, let's say where this actually closed yesterday, which is at 2538, let's call it 2540, then we can continue to move up. Okay, that's it for now. Thanks so much for watching. You all have a great day and happy trading.